this entry work. Let's get it in. You know what I'm saying? So we started off with setting our charts up, and this is where we left off as. The major support is here. Another support is here that we haven't really, marked up because price is way up here now. So I'm going to show you guys, how exactly you should have entered this trade. And I want to get this academy out within the next 2 weeks. So in the next 2 weeks, you guys are going to see, a lot of good videos, a lot of dope videos, but I want to have, record a lot of my live trades. And it may be I wouldn't say a boring video, but it's just literally me just trading live, like my real-time senses, my real-time environment. I want to have a whole section dedicated to that. But right now I'm just trying to get as many dope videos out to you guys as I can as possible. Just like I told you guys about, the Netflix stuff, this is season 2 of Secure the Swag. So I want to make sure you guys are studying this. And then hopefully, shortly, a week or two after that, I can just upload my live trading in here. It won't be no edits, won't be no intro and outro, just be me purely live trading as well. But right now, so entry work. So the reason why I put such an emphasis on the psychology section and why it is the most important section in my academy, and people just, want to skip over it potentially and just go right to the technical analysis stuff, is because the reason you're losing money is because of your psychology. It's not because you don't know what technical analysis is. Like at this point, I'm pretty sure I can ask everybody what support and resistance is and what a trend line is and what a moving average is, and they can really regurgitate it, or they can say it at the top of their mind and really in definition. And that's not where we want you guys to be. We don't want you guys to just be able to read something or hear something, watch something, and then quote it from a definition, but not be able to accurately utilize it and efficiently execute it on a chart. And the reason you guys aren't efficiently executing it is because of your psychology. You guys are scared. You guys are hesitating. You're second guessing yourself. You lose one trade and you're not confident in the second one. And you have to have such an unwavering confidence about you with this trading stuff. And you have to stay disciplined, because if you don't keep your risk management, which is why I started the whole section off of risk management, it's the most important thing, just like psychology. If you don't keep your risk management in check, it's easy to blow an account because you're risking too much. So in order to be confident, look at this. The trend line started here, right? It pulled all the way up, right? And I see several entries. Pulled all the way up, came down and retested this moving average. Now, since we kind of already know it's an uptrend just from this alone, like we knew this was the low and this was a higher low. Obviously, this is why you want to mark your charts up as much as you can. Low, higher low, you know what I mean? Mark it up as much as you can so you can have an idea. Let me actually make this smaller. Here we go. There we go. So you have an idea. So we kind of already know that this is already a higher low. We get a bullish engulfing. That's 2 confirmations that price is heading up. We have this counter trend line right here. And a counter trend line is basically a trend line that goes against the actual overall trend, trying to connect these two, and not so much far back, but it's more so these two. This didn't really go above it, stayed right here, stopped here, came back down. So once we break this counter trend line with this bullish engulfing, it comes up, it retests this. It's support now because it's way up here, but this resistance, 1, 2, 3 hits, and then it finally breaks through. And mind you, this is a daily time frame. Head down to the 4-hour and 2-hour. I got kind of caught up with myself because obviously I'm an intraday / swing trader, so I look at the daily and the 4-hour. But for intraday trading in particular, you want to scale down so you can get these precise entries. You see price, first of all, let's go over here. So you see price make a higher low right here, and it broke through the counter trend line. Not only did it break through the counter trend line, it broke through and retested this moving average. I just made a YouTube video about this as well. It was, I think, the Gold Makes History video that I just released yesterday. I said it then. I said, a trick that you guys can know, whenever price bounces off the moving average, that should be a clear-cut sign to enter. Because price will never just bounce off a moving average and then that's it. Chances are, if it bounced off a moving average, it bounced off the moving average and formed, a pattern, whether it's a bullish pattern or a bearish pattern in the direction of the trend. It broke through some kind of resistance, support, or counter trend line, or the actual trend. You know what I mean? So when you see price bouncing off of a moving average, it is very, very, very like sacred in this, in this world. You see over here, there's no bounce off of a moving average. It's going right through it, and the moving average is trading in between it, which shows that it's consolidation. Whenever you see price clearly just bounce off of it, like over here, you see price go down, it came up, it bounced off of it, boom. What is this? Bearish engulfing. Regular candlestick, bearish engulfing. What did it do? It dropped down 124.5 to, that is about 120 pips. It dropped down. So be mindful when price bounces off a moving average. So a bounce of the moving average gave us a tweezer bottom. Boom, your entry can be right here. On the aggressive side, I'm gonna show you guys an aggressive and more passive way to enter. On the aggressive side, your entry is amidst of the close of this tweezer bottom right here. What am I trying to look for? This line, yeah, look this, thank you. Amidst of this close, let me make this bigger too. So you got to understand, the reason why I say miss it is close is because price can go down and come up, and then before that 2-hour candlestick closes, it can still close down here, which shows that it's not enough, momentum, and it'll head back down. The fact that it bounced off of the moving average with a tweezer bottom, the aggressive side would be to enter here in a long position, and this is where the entry work, the sniper entries comes in. Aggressive, stop loss right below there, and your take profit, several take profits. Your first take profit is clearly to this key level, 1 to 4 risk to reward ratio. Clearly, that's the first one. Once you start to take partial profit, or if you enter again, well, I'll get to entering it again on another video called scaling in. Let's just talk about the entry work just in general. Once you enter right here, excuse me, I talk about it all the time when moving your stop loss into take profit. Now, you only do that when the market creates actual structure. What I mean by actual structure is, in an uptrend, if you see a higher low, higher high, higher low, your stop loss goes below the last higher low. If you see in a downtrend, lower highs and lower lows, then your stop loss goes above the last lower high. So over here, our entry was here, right? A miss of this closes tweezer bottom, aggressive, a little aggressive, right? But it's not so much aggressive. We have several confirmations. We broke a counter trend line, had a huge bullish engulfing. Number 2, 3, the moving averages crossed back over at the red over the blue, then cross over blue over the red. 4, we have this, bounce off of the moving average. 5, we got a tweezer bottom. There's so many confluences why we got in. It's not so much aggressive, but it's still a little aggressive. So right now, we enter straight in. A little bit of negative right here with this wick, a little bit of negative, straight in. It goes right to this major resistance, which obviously turned into support later on, but this major resistance. And then what did it do? It came back down, and then it slowly starts to trade back up. The minute you see price make a new higher low, this stop loss, it won't let me do it here, but in MetaTrader it will. You move this stop loss into break even and actually into profit. This is now the next higher low. So now your stop loss, instead of losing 200, 300, 500, 1,000, 150, whatever your stop loss is, you are now guaranteed to at least make some money. So if price were to come down and hit this level, get the brush tool, and hit this level right here and stop you out, you at least got stopped out in profit as opposed to negative. But guess what? You cannot do that if price is not creating structure. You can't just get in a trade the minute you see profit, move your stop loss into profit. It won't work. It has to come down and create a higher low, or go up and create a lower high in a downtrend before you can able to move your stop loss. So now we're able to move our stop loss, and now we're able to let this trade roll freely and add it again to the next level, which is 127,500, all the way up here. We drag it all the way over, and guess where our stop loss is? Still right here. Now you have several different ways to, move around with it. You can obviously move, from here. You can move it over here. New stop loss, obviously drag it all the way over. It still has not been hit. And then obviously another stop loss. Again, move it here. It's finally been hit when it came back down over here. And you can find some ways to kind of, really avoid that as well. You can obviously take this rectangle, move it all the way over, way up here, where it's like, all right, I see one hit to the resistance, another hit to the resistance, another hit to the resistance. That's three, I wouldn't say a triple top, but it's three different ways as to where prices, boom, 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 clearly couldn't break up. You can easily take your money, it's obviously a bearish engulfing right now, and a red moving average cross over the blue. You can easily take your money and obviously get out, or you could let it play through since it's a risk-free trade and not really worry about it too much. And then obviously it drags all the way down and hits this level. So those two things you want to do, obviously, as well for your entry work as well. I'll talk about scaling in a whole nother video. We won't worry about that too much right now, but we're just worrying about actually entering for the very first time on a trade. You want to make sure you are as, precise as possible, and that's the more aggressive side. Let me get you in on the more, I want to delete that, on the more passive side. 4 hour. So more passive would be to obviously wait for it to clear this, resistance, which is now support. Wait for it to obviously clear it. Once it's cleared it, then it's a matter of, all right, let me get in and watch what it does. And your stop loss, this is the last low. So stop loss is right below there. So right here, stop loss. Entry could have been right here. And obviously you got way into profit, comes down, it gets negative again, but then obviously slowly has to go up to this 1.27 level and the 130 level, which is long term. But overall, we want to be as, non-aggressive as, it depends on what type of trader you are, which is why I said when you're setting up your charts, figure out what type of trader you are, whether you're an intraday, a swing trader, or a scalper. Depends on what type of trader you are. Once you figure that out, then you kind of figure out if you're an aggressive trader or a passive trader. You can't trade in the market without knowing exactly what type of trader you are, because you're just going to do a bunch of things around the world. You do a bunch of nonsense, do all this crazy stuff where it's like, all right, cool. Sometimes I'm aggressive, sometimes I'm passive. You can't be that way. You have to figure out what strategy works for you and then kind of go from there. You know what I mean? Right here, we have a major support as well. Like I said, just make sure you understand what type of trader you are. Figure that out. Once you figure that out, everything kind of, makes more sense. You can be aggressive, you can be passive. Or if you're a swing trader, you can do that consistently. You can't go back and forth. You can't go from, being real physical with the market, basically aggressive. You can't go from, real swinging to real intraday to real scalping. You can't go with those three different ways and back and forth and back and forth and back and forth, because if you do that, then obviously you're not being consistent. You're not focusing and honing in on a strategy. You can master a strategy. Me, I'm an intraday swing trader, but I didn't start off as a swing trader. I started off with being the best intraday trader I can possibly be. And once I did that, then it was like, all right, I can hold these trades a lot longer and be more of a swing trader. You know what I mean? I can kind of do both, but you can't start out the gate doing both, because they say the person that chases 2 rabbits catches none. Catch 1 rabbit first, and then if you want to, then feel free to learn how to scalp or learn how to trade more and hold it long term and be more of a swing trader. But right now, let's just knock your strategy out, have the foundation, figure out what type of trader you are, create a trading plan. I have all the trading plans in the tier 2 course as well, but create your own trading plan, create your strategy based on what I'm teaching you, and figure it out. That entry work is very, very, very serious. You want to make sure you have the best entry possible. And here's another thing, I talk about this in the risk management section as well. If you lose a trade, it's okay. You know what I mean? You're not going to win every trade. You're going to keep losing. You're going to lose some trades, here and there. But it won't affect you if you're so disciplined and your risk management is on par. You guys are so eager to chase money, and you see me making so much money. I wasn't making that my first year, my second year, and even my third year. You know what I mean? I was making a little bit, but I wasn't making tens of thousands, the 6 figures and 5 figures. I wasn't making none of that in my first 2 and 3 years. It takes some time to master a craft. You know what I mean? So what you guys got to understand is keep your risk management great. Whatever works for you. What works for me is 1 to 3 and up. I don't trade anything that's less than a 1 to 3 risk to reward management. You know what I mean? I don't trade that at all. So obviously, if I'm trading what I had earlier on my 2-hour time frame, and it was a matter of let's say long position. I think I got in right here. or the other one. My stop loss was right there, and my take profit was way up here, 127, 1 to 7 risk to reward. The one from here to here was 1 to 4 we did earlier, and way up here, 1 to 14. You know what I mean? Like, you want to have the highest risk to reward ratio possible, because it means I have to lose 7 trades in a row and win 1, and I'm still in profit. Or I got to lose 5 trades in a row, and all I got to do is win 1, and I'm still in profit. You know what I mean? So you want to make sure that your risk to reward ratio is always great, because if you do a 1-to-1 risk to reward ratio, at the end of the day, you can lose 10 trades and win 1. You're a negative trader. We want to have percentage growth. We want to have consistency, and all in all, we want to have profit in the market. So I'm getting a little long in this entry 1 video. I want to kind of break it up. So I'll do an entry 2 video as well. But I want you guys to kind of figure out exactly what I'm saying. You know what I mean? So it can kind of, you guys can kind of relish in it and understand it and incorporate it in your brain. Risk management, discipline, and focus on your entries, and keep your stop loss, where structure is. Don't try to keep it as tight as possible. Make sure you keep it, due to what structure is saying. If you try to keep it as tight as possible, but it's not going with structure, you're going to lose every single time. Keep it with structure. Put it below the last higher low in an uptrend, or above the last lower high in a downtrend, and you'll find yourself more profitable.